So someone asked me in a recent video how I'd invest a certain amount of money during this current market crash. And I thought it'd be a fun video idea to just pick a nice round number, something that isn't too small like $100, but isn't too crazy large like 100,000. Maybe something like $10,000, and just for fun, pretend that I had to invest all of that money and build a brand new stock portfolio right now from scratch. So that's exactly what I'm gonna do in today's video. I'm gonna break down what my purchases would be by categories. I'm gonna let you know specifically which stocks I would buy and let you know why I would buy them and by how much. I think it's gonna be a crazy fun video. I hope you guys enjoy it. Let's go ahead and get started. What's up everyone, my name is Ale, welcome back to my world of stocks. Alright, now if you've been watching my videos for some time, then you know that I would never really do something like this. I wouldn't just spend a giant amount of money all at once. As a long-term investor, I really like to buy my stocks slowly by smaller amounts over time, and then I accelerate my buying if those stock prices are going down like they're doing right now. But for fun, I'm going to say that I'm starting a brand new portfolio here with that $10,000, and from here, I would want to pick up at least like 15 different stocks. I think that would give me a good variety of some value, some growth, some dividends, and maybe a couple other things. And first things first, I would take that $10,000, I would pull out a big chunk of it, say around 4,000, around 40% of that portfolio, and I would put all of that money into some core foundational stocks that I can use to really build the rest of my portfolio around. Some really safe, some of my favorite, absolute favorite stocks for the long term. And there's really three stocks that I can think of immediately that would fit that bill perfectly. And first up here, I'd put 2 out of that 4,000 into what I think is the most attractive stock in the entire market right now, which is Google, ticker symbol GOOGL, who has a very dominant business with leadership in virtually all parts of the internet, including search, browser, digital advertising, and even competes heavily in things like social media and cloud computing. And despite already doing over $250 billion in sales last year, which was growth of over 40%, with profits nearly doubling, they are still expected to grow sales by another close to 15% in each of the next 2 years as well. Yet when looking at the stock, it's actually been dragged down by close to 30% from its highs, which is not only attractive on its own because it rarely ever dips, but at these levels, it's also left their valuation dirt cheap with a PEG ratio of well below 1. In my opinion, this is the best value in the market, so I would make this the portfolio's largest holding at $2,000. Then I'd take the remaining $2,000 and I'd split that up into 2 more stocks with $1,000 each. One of those 2 would be Microsoft, ticker symbol MSFT, who, like Google, also rarely ever dips, but is currently down over a quarter of its value in what is one of the largest drops that we've ever seen in the stock. Yet they're massively profitable, doing almost $170 billion in sales and over $60 billion of pure profit just last year alone, and yet they're still expected to grow sales by another close to 20% this year. Plus, they also have a super dominant business with platforms like Windows, Xbox, LinkedIn, Azure, and more, and they even pay a nice little dividend of about 1% with some excellent growth metrics on it. Then I'd take that last $1,000 and I'd put it all into Amazon, ticker symbol AMZN, who is down over 35% from its highs, but also has a massive business that is dominating some of the largest markets of the future, like online shopping and cloud computing, where they currently hold the most market share in both. And despite already growing their sales by a monstrous 37% in 2020 and 22% last year, they are still somehow expected to grow by double digits both this year and the next, reaching well over $500 billion in each. That is a mind-blowing amount of money. So that's what I would start with. I think those 3 core stocks give me a nice foundation to build the rest of my portfolio around, and I think they would keep it very stable over time. From there though, I would take another chunk out of that $10,000. We already used 4,000. Now I'm going to take a chunk of 3,000, so still pretty large chunk here, and I would put all of that into some dividends. And From here, I'd probably want to pick up around 6 or 7 dividend stocks, get a nice variety here to give me some cash flow as I'm invested in the market. And there's a number of really great dividend stocks that I see out there in the market right now that I could choose from. In fact, I just released a video talking about some of my favorite dividend stocks that I think are trading on sale at the moment. So if you haven't seen that video, make sure you check it out. But I'll just give you a quick list right now of some dividend stocks that I think would fit the criteria for this specific video, and for building a portfolio from scratch, I think it fit it pretty nicely here. And first up here, I would want to pick up a few biotech pharmaceutical stocks because I think there's several that have strong businesses with pretty high yields, like for example Pfizer, ticker symbol PFE, who nearly doubled their sales and profits last year just because of a single product alone with their pepperoni V-shot, and is now using that money to make a number of large acquisitions while also building up their pipeline of nearly 100 different future products. Yet their stock is actually down over 16%, which has raised their dividend yield above 3% with an excellent payout ratio of only 30%. I'd also want some Merck, ticker symbol is MRK, who unfortunately hasn't really struggled much during this market downturn, but that's partly because the stock was already cheap to begin with, and even now they still trade around 40% cheaper than the sector and pay about the same dividend as Pfizer. Plus, they too have a very large and growing pipeline of future products to depend on at about 100 as well. After that though, I'd also want some dividends with huge track records to ensure long-term stability. So I'd pick up some PepsiCo, ticker symbol PEP, who pretty much has always been resilient through recessions and market crashes, thanks to their iconic household brands like Pepsi Cola, Mountain Dew, Fritos, Doritos, Cheetos, Gatorade, and even higher growth new ones like Bubbly and SodaStream. As a result, they've been able to grow their dividend for a gigantic 5 decades in a row, making them now an official dividend king. The yield is a little low though at less than 3%, so I'd also want to pick up some 3M, ticker symbol MMM, who like PepsiCo also owns some of the world's most famous brands like Post-it notes and Scotch tape, and is also a dividend king in their own right, except they're even larger at a growth history of over 6 decades in a row. Their yield is also higher at over 4% thanks to the stock crashing hard in recent years, losing about half their value, which has also left them about 20% cheaper than the sector. I'd also want some even higher yields though, so just to increase my cash flow as much as possible, I'd probably want to pick up a little bit of Verizon too. Ticker symbol is VZ, who is the leader in telecommunications and internet, and because the stock has crashed by about 30% recently, the dividend yield has now climbed up to almost a 6% yield, which is higher than any other point since the Great Recession. And I think those would be a good place to start. There's definitely a few others that I'd want to add to as well, but just to keep the video simple, I think I'd go with those and spread that $3,000 among those 5 different stocks, and we'll say at around $600 each. Obviously this would fluctuate in real life, but we'll just keep the video simple. I'll say I'll spread that 3,000 evenly around those 5 stocks for now. So from here, we're at 7,000 of the 10,000 in the portfolio, and I would take another $2,000 chunk and I would put that into some sort of medium risk stocks, some stocks that may be down for good reason, but that still I feel have a lot of future potential, and especially some stocks that I think could dominate some future high growth gigantic markets. And there's really 4 stocks that I could just think of right off the top of my head that I would want to spread those $2,000 across. So we'll just say that I would put $500 in each one of these. Now, one of those would definitely be Nvidia, ticker symbol NVDA, who is a chip developer, especially on the graphical side of things, that has already lost over half of its value because of supply chain issues, a chip shortage, a horrible economy, the stock and crypto markets crashing, and of course a tough comparison to the prior year where business was booming because of economic stimulus along with increased internet usage that sent their sales skyrocketing by over 60% and more than doubled their profits. But even with a slowdown, sales are still expected to climb by over 20% this year and 15% next year. And over the long term, I just think that Nvidia has a giant growth opportunity in areas like artificial intelligence, cloud computing, autonomous driving, and robotics, and especially smart cities, which is a market that is estimated to be worth literally trillions of dollars in the future by Allied Market Research. On top of that, I'd also buy some Tesla, ticker symbol TSLA, who unfortunately has already bounced back a lot from their bottom this year after reporting a fantastic second quarter earnings, because at a time when the economy is thought to be in recession, Tesla was able to actually grow their sales by another 42% while also growing their profits by another 57% year over year, thanks in large part to record high gas prices that are speeding up the adoption of electric vehicles. Still, the stock is currently down about 35% from its highs because of the struggling economy where high priced EVs may not be a consumer's first choice, and there's also rising competition, and there's a few other things going on too. But I just think that demand will remain strong for Tesla just because of gas prices really alone, while they also continue to work and expand into several other high growth markets like autonomous driving and robo taxis, battery storage, robotics, and even logistics with the semi. After that, though, I'd also pick up a little bit of Meta, ticker symbol FB, just for the future of social media, digital advertising, and of course the metaverse, which is a market that I think will be worth trillions of dollars over the very long term. Currently, though, Meta has already lost over half of its entire value as it's crashed to basically the same levels as the 2020 market crash, in large part due to their large restructuring plans for the metaverse. But that crash is despite the fact that they actually saw gigantic growth over the pandemic and more than doubled their profits over that time. Plus, they have one of the best balance sheets in the entire world, which I feel helps lower the risk a bit from all the restructuring that they have to do. And finally, I'd also pick up some Alibaba, ticker symbol BABA, for the future of, well, let's just say China and the rest of Asia, where there are huge populations to spur very large growth over the long term. Now, of course, I already own, I would already own a very large position in Amazon with this portfolio, but this here with Alibaba would complement that as my sort of Asian version of it, since Alibaba already dominates the online shopping and cloud computing markets of most of Asia. And because their stock has already crashed by close to 70% from its highs, I think long term this could be an extremely good performer. Okay, so now we should be at right around $9,000, so about 90% of the portfolio. We only have $1,000 left, only 10% left, and here's where I would start to go into the higher risk territory. It's only about 10% of the portfolio. It's not going to be able to do too much damage to my portfolio if things go bad, but I would look for some high risk stocks that I think have a great opportunity to recover, some stocks that are heavily beaten down, but that still have a lot of long-term potential. And I would start here. I'll just keep the video simple. We'll pick 4 stocks for this category, and I'll say that I would put $250 into each one of them to make up that last $1,000, that last 10% of the portfolio. And first up here, I would go with another Chinese stock in Baidu, ticker symbol BIDU, who also carries mimicking properties similar to Alibaba, except that they're known for being the Chinese version of Google with the most search market share, and they're even a big player in autonomous driving and the future of the robotaxi market with their Apollo division as well. Like Alibaba though, they too have crashed very hard and are currently down over 60% from their highs, but also I think has a very good chance of outperforming over the long term. Next up though, I'd also want the US data analytics and data management specialist in Palantir, ticker symbol PLTR, who has huge contracts with the US military and defense, as well as the government in general, and even commercial companies who they help with things like supply chains and business efficiency and a lot more, even logistics. Their stock has also taken a beating recently though, already crashing by close to 80% from its highs following a 2020 IPO. And the reason for it is mostly due to their growth slowing down a bit this year at a time when they are still not profitable. But this is a company with gigantic contracts that can be awarded at any moment. So don't be surprised when you see their sales magically skyrocket at times along with the stock price. For the third pick though, I'd also take some Teladoc Health, ticker symbol TDOC, who is the world leader in telemedicine, which is exactly where I think the future of healthcare is heading over the long term. And despite them practically doubling their sales in both 2020 and 2021 and still managing to do another 20% plus in each of the two following years, that slowdown in growth coupled with a lack of profitability, coupled with the world and hospitals in general opening back up, which means less growth in virtual healthcare, it was enough to destroy the stock by over 85% from its highs. At these levels though, it's like all of their growth from the pandemic never even happened, and I just think that that's ridiculous. So the stock to me is a screaming buy if I'm thinking long term. And finally, I would just add a little bit of Pubmatic to finish it all off, ticker symbol PUBM, which is actually one of my most recent purchases that I've been talking about lately. And because the economy is in such horrible shape right now, shares of this digital advertising specialist have now crashed by over 80% from its highs, leaving the stock trading for an even lower price than their IPO. And yet because this company is so well run, they've actually been consistently profitable for years at a time when their largest competitor in Magnite has been losing tens of millions of dollars on the bottom line. And even through this horrible economy and possible recession, Pubmatic is still managing to grow their sales by over 20% a year. In my opinion, the selling has been overdone, and most analysts seem to agree with me, as the stock currently trades well below the highest estimates, the average estimates, and even the lowest estimates. But I think that would just about do it. That's how I would break up a brand new portfolio of $10,000 in this current market crash, downturn, whatever you want to call it, in this current environment. That's how I do it. What do you guys think? I think it would perform pretty well long term. I think I would enjoy this type of portfolio, and I'd love to hear what you guys have to say down below. So leave your thoughts down there. Do you agree with any of my picks? Do you disagree? Are there any stocks that you would trade for any of the ones that I have in there? I'd love to hear your thoughts down below. But thank you so much for stopping by. Please hit that like button if you did enjoy the video, and I will catch you in the next one. Take care. Bye-bye.